Hey, what's up? The last several months, I've been systematically going through AI infrastructure, automated execution systems, algorithmic arbitrage, bot-driven trading, not because it's trending, but because the underlying mechanics are genuinely starting to mature into something worth paying attention to. So today I'm going to show you exactly how one of these systems operates, and then give you some practical knowledge from my own experience that I think is actually worth your time. So what I want to do first is show you what a legitimate automated trading setup actually looks like when it's functioning the way it should. Not the pitch, the actual workflow. I'm on the platform right now, and I'm launching the bot here. Okay, it's open. First thing is choosing my pair, and the breadth of options here is a direct result of the fact that this bot is running simultaneously across 17 plus exchanges. That's what creates this kind of range. I'm going with Bitcoin, most transparent choice for a walkthrough. Okay, switching to live mode, and now it's asking for my address. Okay, jumping over to my wallet. Okay, I've got the address, coming back to the platform and dropping it here. Good. Now, capital allocation. This is the working capital I'm assigning to this session. I'm going with, yes, that number makes sense. Okay, I'm configuring risk level. This setting defines the bot's selectivity threshold, how far into uncertain territory it's willing to operate before it passes on a trade. It's not just an aggression dial, it's a discipline setting. And then is arbitrage strategy. This is the operational framework the AI applies throughout the session, the specific logic it uses to identify and execute on pricing discrepancies across those exchanges. Okay, I'm looking at the full configuration here. Good, moving forward. Funding screen is up now, and I want to mention this because it's actually one of the more practical design decisions here. I'm not tied to Bitcoin only. I can literally just use whatever makes the most sense for me right at this moment. Okay, that's through. Now pressing I've sent, and it's running. Dashboard is right here, trades executing, win rate tracking, average spread showing, chart updating in real time, clean and readable without being oversimplified. So I'm gonna let this work for a few minutes, and then I'll show you exactly what happens when we bring it in for a landing. Okay, good. Hitting stop now. Okay, this screen gives me the complete picture. Which strategy was active throughout, total runtime, trade count, my final win rate, and the net return after the platform's fee has already been pulled from it. That figure is what matters. Tapping withdraw and just giving that a few minutes to process the transaction. So let me actually say something useful while we wait. I want to make sure the mechanics of what this bot is doing are actually clear, because I think people often move past this part without really grasping it. What's happening under the hood is actually fairly straightforward. The bot is monitoring the price of the same asset across exchanges simultaneously, in real time, every second it's active. And the moment it identifies a price discrepancy, the same coin priced lower on one exchange and higher on another, it executes both sides of that trade, almost instantaneously. The margin between those prices, however narrow, is the return. And the reason this requires AI specifically is purely a speed problem. These windows exist for fractions of a second. No human process is fast enough to catch them consistently. The technology closes that gap. That's the whole mechanism. Okay, so I've been stress testing platforms in this space for years, methodically, with a proper process. And doing that over a long enough timeline means I've encountered a significant number of fake projects. And what I've noticed consistently is that these things don't exist somewhere obscure. And that's the actual problem. Not that fakes exist, but that they've learned to inhabit exactly the same spaces as legitimate ones. The geography is identical. So from years of firsthand experience, here are two things I look at first, without exception. The website design. Fake platforms always have something subtly inconsistent about their visual presentation. Typography that doesn't quite match across pages. Layout sections that feel like they were sourced from different templates. It holds up at a glance and then starts to fall apart when you actually examine it with intention. And the second thing, which I personally weight more heavily, is the interface itself. A platform with genuine longevity as a goal has to make the product experience coherent, because that's what drives retention. A platform without that goal doesn't have the same incentive, so what gets built tends to be either unnecessarily complex in ways that serve no clear user purpose. And over the course of a few weeks, I've run this platform through more than 36 deliberate sessions, varied the tokens, adjusted the settings and capital allocation each time, and pushed it across different conditions intentionally. And every time I've applied that kind of pressure, the platform has responded correctly. Withdrawals process cleanly, the numbers hold up, nothing has surfaced that gave me any reason to reconsider what I was looking at. So hope this was useful. See you around.